Welcome, everyone. I should start by introducing myself and exactly what it is that we're doing over the next hour or so. But first things first. Why are we here? Well, the Africa Financial Industry Summit, of course, was first held in 2021. It brings together the entire African financial sector community. We talk about some of the key issues that we're all facing, that we all have to deal with across the board. Financial inclusion, the development of a truly pan-African financial services industry. How do we develop a sound, sustainable base from which we can actually fund the projects that we need to execute across our countries? It's an annual event. The next one, of course, will take place in 2022. As usual, with the quality standards you expect from us, we'll bring together all the key decision makers from banking to fintechs, mobile money operators, regulators will, of course, be in the room. Microfinance players will be here, fund managers, regulators, policymakers. They will all be in the exact same location. So in the wake of the event that we held a little earlier in the year, we decided that it makes sense for us to keep this conversation going, break away from the usual conference format where we meet in person, and then the next time we see each other, it's 12 months later, and things have completely changed. So between now and the middle of 2022, we'll be holding a series of webinars focusing on the changing realities of African financing. What's happening in our neighborhoods? What's happening in our industries? What are the challenges we're facing? How are we tackling them? Because in this part of the world, yes, challenges will always be there, but the best part is always a solution somewhere around the corner. In more ways than one, of course, this pandemic has drastically changed the trajectory of the sector. It's accelerated the pace of going cashless, digitizing payments, digitizing transfers, but it's not really changed one key element, right? Countries and economies that we all call home right across Africa, they all still need to attract enormous amounts of resources to develop, to repair the damage from the pandemic and get to where we believe we need to be. So today we have an interesting conversation lined up for you. My name is Ramanyang. I am going to be your moderator for the next hour or so. We'll be talking about a couple of interesting things, but our focus today very specifically is on the question of mobile money and the financial champions that we have across the continent, East Africa, Central Africa, West Africa, Southern Africa, Northern Africa. Are they really ready to cooperate? Are we ready to work together? Or is that a question not worth exploring? And if not, why? We'll be covering all of that in a bit more detail at the moment. But first, to set the stage for what we're going to be discussing in detail today, let me introduce Robin Miller from Delberg to lay the groundwork, to set the stage for this conversation to follow. Robin?
Absolutely. Thank you, Rama. And thank you to the summit and to the panelists in the conversation. I'm really looking forward to today's discussion and this big question. How do we think about the bigger shared interests we all have? And then how do we think about getting to cooperation in order to really unlock the potential that mobile money has for the continent? I'll ask the colleagues to share the first slide. If we can. Thank you. Mobile money grew substantially in Africa in 2020. It's continued to accelerate. We've seen over 160 million active accounts, a total value of more than 495 billion in transaction values. And this is a growth of 23%. That growth has been consistent across the sub-regions of the continent as well, which is very powerful for the region. East Africa continues to dominate, but we also know that there's been disproportional growth in coverage of particular segments of the economy, so unlocking new value. One of the statistics that stands out in my mind is the fact that growth for women and access to financial services through mobile money has actually outpaced global growth in the same area. This is really exciting. I think we can go into the next slide as well. We know that there are a number of reasons for this. No one is a stranger to the COVID pandemic. And of course, while that's have had devastating impacts on health and economies around the world, it's actually had a perverse positive impact for when it comes to the acceleration of mobile money, as well as unlocking some trends that have already been in the works. Just to name a few. I think the obvious one being a forced digitalization for behavior amongst consumers and SMEs. For better or for worse, we've seen an increase in use of mobile money services across the continent, and a range of services as well, not just payments, but equally utilities, increase in lending, insurance, other solutions. A big one for me is also the accelerating force that COVID has had around digital transformation agendas. Countries, even before COVID, were really thinking differently about the role that digital finance and mobile money plays within a digital transformation agenda, and thinking of it not just as a service in and of itself, but recognizing that when you think about what's needed to unlock economic value in a digital economy, it's not just about the infrastructure, that is the fiber and the networks and devices and cost of data, but a critical enabling force and enabling layer comes through the ability to transact and exchange financial currency for goods and services. This comes on the back of things like increased emphasis around identity systems, around addressing systems. Things will unlock pockets of value, and taking that systemic view in terms of thinking about how mobile money and the role of digital infrastructure can really accelerate growth in the economy. Interoperability has been a theme, continues to be a theme. How do we get these services to talk to each other? And how do we provide the platform for scale? Competition being very healthy and critical in order to provide the best and the most services and reach a maximum amount of users. How do we ensure that these system solutions, wallets, can talk to each other? And I know some of our panelists today will go further into that topic, and posing a big question: how do we look to interoperability as a way to build platforms for scale and continuously introduce new products and services? And policy, another accelerant in terms of where we've seen a range of policies come online and continue to come online. Everything from opening up the space for digital finance, thinking differently about licensing, looking at zero rating in order to allow greater and faster access, reducing the costs, and thinking about different models for even how payment systems begin to work. So quite excited to see where these trends can go and the positive impacts these trends have all had, as you can see in the growth from 2020 and even into 2021. I think we can move to the next slide. These investments, mergers, partnerships are really signaling value in the market, and the value that is both currently present, but also the potential that it signals with regard to where mobile money plays a role in both the social and economic growth of the continent. I won't dwell on these too much. We have a number of panelists in the conversation today, but we're seeing a tremendous signaling in terms of the kinds of valuations we're seeing on mobile money, in the kinds of partnerships that are being struck, in the types of investments that a number of key actors in the industry are making, and where they see the potential of the system heading. We can go to the next slide. So this introduces a set of critical questions, I think, and the critical questions being: how do we build on the momentum that's occurred positively in 2020? How do we unlock the potential that's clearly being seen? And how do we begin to think about what might be remaining? So what are some of the critical questions and challenges that still remain today? Well, one for me is certainly exclusion. Despite the fact that we've continued to grow, about 400 million adults across the continent still lack access to financial accounts at all. What might that mean for the way in which some of the advancements in mobile money needs to coincide with broader investments in infrastructure, in policy? And how do we coincide to unlock opportunity for segments that may not yet be fully served? I think a second realization, and potentially within that, is a recognition that the pockets of economic opportunity across the continent may not be as apparent or visible as we would think. We talk a lot about the growth of SMEs. We know that the informal economy has historically been some of the fastest growing spaces in our countries. At the same time, they're harder to point to. It's not as clean and simple as the urban versus rural divide. So how do we find those pockets of economic opportunity and really lean in? How do we think about moving from not just products, but to products, productivity, and opportunity? So agricultural value chains, those transcend borders, they transcend different subsections of our countries. How do we think about the ways in which mobile money can stretch and reach into new spaces? Data is going to be a big piece of that. There's a tremendous amount of money, amount of information underlying the information that banks and telcos have. There's also a tremendous amount of publicly available data that, when pulled together, can unlock pockets of economic activity and start to point to new opportunities for where growth and advancement can go. And I think that the big question, and I'll end with this one though, there's a big question here about how to think about collaboration and cooperation. Ramat teed that up very nicely. The question about what does this mean for policy? How do we start to think about creating the even playing field, but the even playing field that brings the best of capabilities and really aligns towards greater value for everyone? Thinking about the big question of interoperability. How do we think about the way in which building the rails can start to lead to pathways for scale for payment systems as they exist, plus new products and services. And finally, what is the role that government and industry play together in working together to figure out the clear and essential frameworks and structures that will allow more players to come in, more players to compete, and to bring the best value in products and services to the table. So with this, I pause and I look forward to the discussion with the panelists. Ramal, I'll hand back over to you, and really excited to see how we can dig into some of these quite difficult questions and see where there's greater value to be unlocked. Thank you very much.
Thank you, Robin. Much appreciated. Right, so you've done a fantastic job of laying down the groundwork for the context, the social, the economic, and regulatory context in which this entire conversation will take place. And just before I introduce my panel, I'd like to remind our audience of some of the basic ground rules around this conversation. So first things first, of course, the conversation will continue online. We're here to essentially try and brainstorm as many ideas as possible. You'll find there's a Q&A section in Zoom that we'd like you to throw your questions, your ideas, your thoughts into, and we'll put those to the panelists as a conversation does continue. Yes, we will certainly be availing the presentations from this particular event. Secondly, we'll have this conversation going on Twitter as well. The hashtag to use for this particular conversation is AFIS Digital Events, AFIS Digital Events. That's a hashtag to use for this particular conversation. Throwing your questions and your views and your comments on Twitter as well. The team, of course, will be monitoring that particular stream. So then, our able panel today, let me start by introducing them. Rachel Balsham is the Deputy CEO and the Managing Director for Emerging Markets Enterprises at MFS Africa. As you saw probably in the slide presentation a little earlier, MFS has significant reach, 320 million mobile money accounts right across the continent. That's basically like Ethiopia multiplied by 3, right, in population terms, relatively large. Started a career at the Millennium Challenge Corporation. She was working on large-scale development grants in West Africa there. Alumnus of Wharton and Smith College. Matthew Messier is the CEO of Open Innovation in FinTech at the Action Group. He's been traveling and working across the continent for many, many years, focusing deeply on telecommunications and mobile financial services over that period of time. He's joining us, of course, from Madagascar. We'll be hearing some very interesting things that they're working on from that end of the world. Blaise Pascal Oko-Ebil, he runs mobile money and indirect digital channels over at EcoBank, and he's been there in that position since May 2018, covering 33 different countries in which the group is actually present. And he brings an interesting blend of skills to the table because he's been on both ends of the fence. He's worked on the telco side and now he's on the banking side. It'll be interesting to get his feedback and his thoughts and ideas on exactly where this cooperation or coopetition, for lack of a better word, is heading. And we're also joined by Aisha Touré. She's the CEO of Orange Money, Mobile Money in Mali. She's highly involved in the investment committee there for their license renewal process. She joined Orange as Chief Strategy and Innovation Officer. She was in charge of Mali's 4-year strategic plan, and she's a board of director in charge of strategy, innovation, business development, and transformation as well. This is a fantastic panel that we've put together for our conversation today, and we'll be hearing a lot of interesting things from them over the course of this particular hour. So first of all, thank you very much for making time for this conversation, for joining us from pretty much all across the entire continent. But first to you, my audience, I'm going to have a poll running in the course of this conversation. And we're trying to gauge where the room is at with respect to certain specific things. So here's our first question, pretty straightforward for you. Are Africa's mobile money operators really ready to cooperate? straightforward question. It sounds innocuous, but when you ask this in some rooms, the debates get very, very heated, right? So this is the question. Are Africa's mobile money operators, are they really ready to cooperate? Or are we still in a situation where, it's almost like being a parent looking at kids playing around and you have to tell them to play nice, compel them to play nice? Is that where we're at? Your options are on the screens. Yes, they are. Yes, but regulations in tech really doesn't allow for cooperation. Not yet, but they should. And finally, no, they want to replace banks and insurance companies. You can vote on that particular question. We'll be circling back to the questions, to the answers rather, a little later. But let me start with this panel conversation. What's the competition landscape for you like at the moment? And what's your assessment of the relationship between the market players, between fintechs, telcos, and banks?
Yes, thanks, Rama. Well, first, I think there's no competition between local actors on banks, mobile money, insurer, fintech. Today's only real competitor is cash. Cash is king today, and this is our real competitor. And today, Africa has a huge opportunity to leapfrog its financial services, like Africa did with the voice services, with the internet services, where they jump from a place where there was no much services to everybody has it on his hands. So today, I think we have a huge opportunity to collaborate together, that we don't have a real competition between us because there is so much to take that nobody can take everything. And as well, I think we should have a sense of emergency because the world is not waiting for us. And we could have competition coming from abroad. It could come from Europe with some diaspora apps that are coming into our markets like Wave is doing in Senegal. We could have the GAFAs coming tomorrow. We could have PayPal as a competitor. We could have Alipay. We could have all those kind of competitors. Would come from China, India, because those guys are developing huge super apps. And once they will enter the African markets, they will have already millions of customers, not to say hundreds of millions. So I think that if Africa wants to have its own champions, everybody needs to collaborate. And cooperation is a no-brainer for us today.
All right.
All to become bigger in order to survive tomorrow.
Aisha, cash is a key competitor, Matthew argues. Do you agree?
Hello, everyone. Yes, I definitely agree. And I think we still have a lot to do to foster financial inclusion in our countries. So definitely cash is a main competitor, as he said, because you have many actors, but you still have maybe half and even more of our population that do not use mobile money today. And even when we look at the telco customer basis, it's still very high compared to the mobile money customer basis. So we still have a lot of clients customers to enroll. And I think that, yes, cash is our real competitor.
All right. So Rachel and Blaise, if cash is the main competitor, why is it that it's still so hard in 2021 to get telcos and banks to work together, right? Because you look at some markets and you've got banks that are saying, no, we're going to put in specific price elements to move money in and out of our system, or vice versa. I mean, if cash is a main competitor, right, we want to get more people into the financial system, want to include more people in the financial system, then why do we still have so much friction between market actors? Rachel, let's start with you.
Sure. From our perspective at MFS Africa, our core business is interoperability and connections between systems. So I even take issue with the question in the first place of is there enough willingness among mobile financial services players and telcos and banks to cooperate? Our experience is, of course, that there's plenty. And our partnership with EcoBank, among other banks, but Blaise Pascal sent me a Momo transfer recently, so it told me not to mention any other banks. But we work with EcoBank among other banks across the continent, connecting them to mobile money systems. So our core business cannot work if there isn't that willingness to cooperate, if there isn't that vision to see, okay, my customers need to interact with the customers of another network, whether that network's in our country, whether that network is a bank, whether that network is in another country, or whether that network is not a network at all, but say an app like a diaspora facing money transfer app. So our experience is, as an interoperability player in this sector, is that there is plenty of willingness to cooperate. Where we find this friction is that there's an artificial scarcity of players when it comes to licensure. So there's the perhaps eventual real scarcity of number of customers, but like Mathieu and Aisha said, it's really, the market is still so huge. There's still so many people who are still dealing only in cash. So there's no real scarcity when it comes to reaching a customer and giving that customer a store value and a mobile financial service. Where there's the artificial scarcity is where it goes primarily when it comes to what regulators allow us to do as fintechs, as financial service providers, as digital financial service providers.
Okay, Blaise, you've sat on both sides of the fence, right? You've been on the telco side of the fence. Now you're on the banking side of the fence. From both, given your experience on both ends of it, where's the friction?
I would say in the beginning, friction could be there, but now it's no more the case. If you look at the journey of the mobile money players, it was more of the acquisition first. They've been pushing the GSM customer to get used to this cashless means of transferring money. Actually, it was only transfer. And then the airtime purchase came in. So it's more of a question of content that's we do have within the mobile money ecosystem, which will push the end user to see the need in terms of the interoperability. And in most of the case, except the cash, which we would like to avoid, if you go on the payment side, that's where banks are playing a conventional role. Banks have been there in the past, enabling merchants to receive payment digitally, and now connecting with the mobile money, connecting through the partners like MFS or any other aggregators. We are positioning ourselves in the middle to help all the merchants be able to receive funds. I'll give an example. We have quite a few telcos today not onboarding merchants, but still leveraging on EcoBank footprint to get use of the EcoBank merchants. So the debit will leave from the wallet of the mobile money customer straight into the bank at the satisfaction of the merchant. So that merchant needs is a cash flow. They need money right away. They don't want money to be positioned for quite a bit of time within the mobile money ecosystem. They want to spend it for their own supply needs. So the bank is helping in having this interoperability smooth. And we can name many, many other services in that ecosystem, like the lending, like the remittance, which will help put more of the dynamism within this mobile money ecosystem to avoid cash.
Absolutely. Ritu in the chat is leading me into my next question, because the concern this person says is really, the issue is I find it to be expensive, right? And the cost of moving money around is an ongoing concern. We saw, of course, in East Africa, for example, at the start of the pandemic, the central bank in Kenya sat down and said, look, any transactions below a certain number, we're going to essentially zero rate them. Telcos and banks cannot charge the clients for moving money from point A to point B. But as we try and get more adoption into financial services, get more people into the formal financial services sector, how do you assess the risk that regulators will wake up and decide to impose price controls on tariffs? Aisha, let's start with you.
Thank you, Rama. Actually, I don't really see it as a risk because the mobile money prices are decreasing in our markets. This is what we see. In Mali, for instance, in July last year, we have decreased, we have lowered our prices. And this was our decision. And then we have lowered them again this year. And I think everywhere you can see this kind of fact. And because we see that every time that we decrease the price, you have a strong increase on customer transactions. And even when you are in a dominant position, a strong leadership position, as we are in Mali, you can see that when your prices are high, your customers will not use your product much. And I think that it may come, but I don't think that regulators will need to push a lot of pressure on us to decrease the prices, because we are all seeing that high prices is really a block road for financial inclusion. And
Blaise, you're also given everything that you see across the 33 different markets you operate in, are there different approaches that regulators are deploying on this particular issue? Is price sensitivity something they're clued on, and they're thinking, well, maybe we need to step in here, or maybe they're trying to apply at moral suasion, to use the industry lingo, to get you to lower prices?
Sorry.
Yes, Aisha.
No, Aisha first, and then Blaise.
Okay, then yes, we are regulated by the West African Central Bank, and as you mentioned it before for M-Pesa, our central bank has asked us to lower the price during the COVID crisis. So yes, I think they are very sensitive on the prices, and we have done so. We have all done so in last year between March and May. We have lowered the prices for some services like national transfers, bill payments. So I think the regulator is looking at us, and we should not wait for him to come and tell us just lower your prices. I think we should do so. We should do it by ourselves, and that's why what we have started already in some countries.
All right, Blaise, your perspective from the 33 different countries you operate in.
Yeah, it all depends on the wallet provider license. That's one. And second, you have also some regulator not regulating on that perspective, but they've been pushing us to zero rate inter-bank or inter-financial institution transfer to just promote this interoperability during this COVID period. If the COVID was not there, we could have been still in that situation of each institution still having their own pricing, which in reality are not taking in consideration the impact when it's cross your distribution network to the others. I understand the mobile money players, they have a huge cost of distribution when it comes to that bottle that we have, like Mathieu spoke about it, the cash is our biggest enemy. This will always result in having the end user going for the cash out. Once they will try to get possession of that money, that's the rationale behind the high price of where the money came into the ecosystem. And if we all collaborate mutually, bilateral or as key players in these financial inclusion initiatives or journey, we will be in a position of putting in place more and more value-added services, which will reduce the need of cash. And this will take us into the position of reducing or even zero rating some bank to wallet or wallet to bank transfers.
Okay. There is an interesting point that's being raised in the chat, though. This is by Director Medina Diang. And basically, the argument there is that I believe it's a network effect issue. Everyone's rushing to get the greatest number of customers and be number one before then starting to think about collaborating. And that's an interesting point, because it brings me to both of you, Matthew and Rachel, because if you're looking at it from a B2B perspective, right, if you're sitting in between the consumer on one end, you're not essentially facing the retail consumer, but you're essentially acting as an interface, for example, between, say, maybe a telco and a financial services firm, a bank, an insurance company, and so on and so forth. That puts you in a position you're a price taker, right? So a price, how do you respond then to that price sensitivity, yet you're not necessarily in a position to set pricing? Rachel, let's start with you then, Matthew.
Sure, exactly. So as for our interoperability business, we are exactly that, a price taker. And we have stated in some of our thought leadership pieces and publicly in contexts like these, that it's our ambition to bring down the cost of cross-border payments in Africa to, in the low single digits. So without even the pressure of a regulator or the SDGs, that's what we aspire to do as a company. And we have the belief that with the ability to net off the transactions that we clear with with our 30+ African country footprint, we're able to do that profitably, even for very small amounts with very small fees. So we're all another area that we've invested in to balance out that ambition to even make some of these low value transfers free, is to invest in other value added services, so merchant services, corporate settlement services, other value added services using the rails that we've put in place for the person to person money transfer, to be able to add a margin that those different types of clients are willing to pay, so that we can, at least to our mobile network and money transfer operator partners, say, we can make this free. We can make moving 20,000 CFA from Benin to Cote d'Ivoire, we can make that free, because that's not where we're making our margins in the first place. So that's the direction, like Aisha said, that's the direction we're going anyway. That's the direction, irrespective of regulatory action, that the market is going. So that's something that we absolutely embrace. And there are, we're at a stage in this industry where we're reaching kind of digital, we're still on the path to digital store of value ubiquity, right? We're all in the process of trying to reach every customer and to connect every corridor, in the case of MFS Africa and our partners, so that anyone can move money from anywhere to anyone else, irrespective of their store of value. So the cheaper we can make that, the more exciting the offer is to the customers of our partners, and the more flows we see across those corridors. So we saw in our early days, we saw some of our partners really wanting to kind of maximize the profit per each transaction. That's just not how you grow this business. That's not where we are in this in the phase of development of this part of the industry. This is an industry where you have to kind of overinvest in growing your reach, and so that it becomes ubiquitous, so it becomes second nature, and so people have a compelling reason to switch away from cash.
Matthew, your perspective?
Well, I don't want to kill the enthusiasm on the free movement of money, but we have to take care of our customer first, on financial inclusion first, and we have to understand that mainly our customers, they use basic phones. And when they use basic phones, they need to have an access to a USSD menu most of the time, and they receive SMS. And this is not free. And this has a cost. And if you imagine that you will not pay for this, it means that you are not going to allow the telco operators to get money out of it. And if they don't get money out of it, they will not invest for you. They will not go in remote areas. So if you want really to reach financial inclusion, you need to have a fair price, which is definitely a must, but there is value for this transfer of money. I understand all the models that are based on application, on the fact that merchants will pay, and so on. I truly understand that this will be the future. But when you get an application, the bureau of the application is paying his internet access, the customer is paying his internet access as well. So when you translate this to USSD platform, somewhere someone has to pay. So I will say that's one point which is let's be fair. I see that in West Africa, for example, there is a regulator saying that you have to decrease your price, which is true because prices maybe were not that fair. In Madagascar, we have decided to go more on an East African model, which was to say it need to be really affordable for everybody. Okay, so but we take money a little bit everywhere. It's a different system, okay? But at the end, when regulators look at our prices, they don't ask us to decrease. They tell us, what can you do? Which is a totally different perspective because they see us investing on research and development, in user experience, and so on. Because if we want this market to continue to improve, you need to get profit out of it in order to reinvest on the solution. And the last point, which was interoperability. When you're number one, you have to open your arms to the others. This is what we have done in Madagascar. And we were, and we are still number one, and we were the second in Africa to launch interoperability with our dear friends of Orange and Airtel. Because once more, cash is king. So whatever you can do to fight against cash, meaning interoperability around mobile money, we have already launched as well interoperability with all the major banks of Madagascar. So we have created, without a national hub, a full ecosystem of direct interoperability. It's just a question of willingness from the different operators to collaborate. And the fact that you are number one or number three, it's not an issue. Just look at who's the right competitor. If you decide that it's cash, you do whatever you want to collaborate with everybody.
All right. A little earlier on, of course, we had asked you, our audience, all 160 of you in the room at the moment. So we'd asked you if in your view, African mobile money operators are really ready to cooperate. So let's take a look at the results of that particular poll. Wow, that's an interesting one. So 35% of you think that the regulations and the tech do not allow effective cooperation. Another 35% of you say that, no, not really. They're not ready to cooperate, but they should. And then 19% say, yes, they are ready to cooperate. And 11% say, no, they want to replace banking insurance companies. That's an interesting one. We'll circle back to that a little later on. So 35% think that regulations and tech do not allow effective cooperation. And that leads me back to an interesting question around interoperability, because that raises a question of infrastructure. And the easiest way, I think, of painting a picture around this is the fact that we're all trying to move money, right? It's like trying to move people. You've got guys who will be on bicycles, you'll have people in taxis, you'll have people driving their cars, you'll have people on buses, and yet we need to build an infrastructure that they all can share, that they all can work with. In that sort of environment, who should build that infrastructure, one, and two, who should pay for that infrastructure once it's deployed? Should it be banks paying? Should it be telcos paying? Or should it be, should we start splitting costs right across the board? That?
You again?
Go for it, Matthew. Because infrastructure ultimately comes down to that question of, who's paying for it, right?
Yeah.
Okay. Is it Blaise, or are you asking Blaise or myself?
Let's start with you, Matthew, and then Blaise, you can jump in.
Okay.
Okay. Well, what I think is that we should think in terms of service to the customer. I think we should share the value, but today we really have our dear friend of the banking ecosystem understanding that we are really giving a service to their customer. Meaning that when you have a bank going to a wallet, your customer is accessing to the full ecosystem, a withdrawal ecosystem, a payment ecosystem, and this has value. So the same way that I was saying that to access to your USSD platform, to access to your SMS, there's a value out of it. I think that banks should see the value. Other things sometimes with some PSP or with Visa and MasterCard, they see value and they pay for it. So my opinion is that they should consider mobile money as well at this level and pay for it. And second point, this is for, I will say, bank to wallet. On wallet to bank, it's a great way for banks to collect money without any risk, without any logistic, without opening of agencies and so on. So as well on that side, I see that in the collect part, there is some value. And for the banks, it's a huge opportunity to provide their service using mobile money as a platform to more people. And the same way that in telcos, you invest a lot in urban because you get money out of it. And then you are able to go to regional areas, to remote areas, because you are getting money from the urban. Banks should consider as well that they need to invest as mobile money on considering, I will say, to make an analogy, mobile money operators as mobile money customers as remote clients, and they have to do an effort to serve those customers.
Blaise, do you want to chip in on that before we jump into our second poll question?
Yes, quickly on the infrastructure, actually, the accessibility to that infrastructure, that is the key concern. It's mobile money is part of the same entity, the same family, or sometimes maybe they don't cross charge, but fintech and
Okay, we're having a few problems with Blaise's connection there, but let me just put in the second poll question before I come to the next element of the discussion. The second poll question is coming up on the screens now, and it's pretty straightforward because as we talk, we've talked about the infrastructure layer, right, of where the payment systems are at the moment. Are we collaborating? What do we need to do to collaborate better? But as we move up the chain, right, do you think that mobile money operators are properly equipped to go into lending and insurance operations and bear the risks associated with such a move? In your opinion, do you think that mobile money operators are equipped enough to go into lending and insurance operations and to bear the risks associated with that? And that actually ties in rather neatly the question that we're seeing as well on within the Q&A from Ghulam Nabi. You're asking that, look, MNOs essentially look at mobile money revenue as a way to close the increasing gap in the voice and data revenue, and that comes solely from transaction revenues because of the licensing limitations on credit and deposit taking. Isn't the answer, therefore, to allow mobile money operators to expand their licenses into full banking licenses? Aisha, do you want to start with that? Would a banking license make sense for Orange in Mali?
I think it is two different things. It's not really because we have Orange Money, and for instance, for us, we have also Orange Bank, and we can see how a mobile money operator can collaborate with a bank. So today we are an e-money issuer regulated by the central bank, and there are some things we can do, some other that we can't. Lending, for example, credit and saving are products that our agreement doesn't allow us to offer, but we can still work with banks to do so. That's why what we are doing in some geographies with banks or microfinance institution to offer this kind of products, and I think it can really work well if you have the good pricing and if you set up the good partnership. But today it's not for us. It's not in our strategy to become a bank, because I think a bank business is different from a mobile money operator business.
Fair enough. Matthew and Rachel, I'd like to come to you on this one, because as we try and get these value-added services off the ground, right? And you alluded to this a little earlier in referring to the likes of WeChat Pay and Alipay, and how you've got this rise of super apps, right, in countries like China, a market of 1.4 billion people. And these are fintechs providing services that traditionally would be provided by insurance companies and banks. And to put it a bit glibly, but is that the future? Is this, are we ending up in a situation where fintechs are going to be basically replacing, to some extent, banks and insurance companies?
If I can jump in, I think the replacing, I think, is already seeding a framing that I think isn't quite right. What I think we will see is a decoupling. So what the decoupling the place where you store your money from the place where you get your insurance product, and even the place where you get your insurance product, or the company that you get your insurance product for your health or your life, maybe a different company than insures your car or your house, and that all of these companies are able to reach you and market to you and enact payments to you and from you through the mobile money rails that have become interoperable through various connections and cooperations and partnerships. So a great example of this is one of our partners and investee companies, Inclusivity Solutions. They offer low-cost insurance to consumers using mobile money services, sometimes white labeled, sometimes not, in a way that really centers the specific insurance needs of this market segment, without the kind of baggage of the traditional insurance industry, and also without the limitations of, they're a company that only focuses on insurance, right? They're not the one segment of the mobile money team at a telco that's really focused on moving voice and data. So I do think that you are not going to see insurance focused companies disappear, nor lending focused companies disappear, just because those are full businesses. There's a lot to figure out and do well. And as we see more and more competition, you're going to see more and more companies kind of really competing to win in those spaces. But those companies will be riding the rails, so to speak, of the digital payments infrastructure that the MNOs have put in place.
So it's almost
and
like
that infrastructure becomes usable when you're able to use, yeah.
So it's almost like a build an infrastructure and get as many people to use it approach.
Exactly, and that doesn't mean that the MNOs can't have a competitive offering themselves in the insurance and the lending spaces through their own partnerships or their own in-house licenses, but that we're going to see a multiplicity of financial service offerings available to users of mobile wallets. And when it comes to interoperability, the end user doesn't care if that insurer is able to reach them through by being part of the MNO, or by a direct connection to the MNO, or being part of the same hub network as the MNO. The end user doesn't care how that interoperability takes place. So it's just a question of how those larger market players are interested in playing. Are they going to try to block out smaller fintechs from connecting to their users? Are they going to welcome in sort of a marketplace of financial service providers? That's a competitive commercial question for MNOs to.
Matthew, as you bring in your perspective on this, thinking, because every time I think about this, it's the thing that that always strikes me is just how much data, right, that fintechs and telcos have, how much information we have on what our consumers are doing, who are they paying, who are they moving money to, where they're getting the money in from. There's a lot of data that collectively the industry is sitting on that has potential to be turned into, fantastic analytical tools. You feed that into algorithms that will then tell us, okay, this is the credit risk for this particular client. But are we jumping the gun here by thinking about that replacement question, or are you more along the lines of what Rachel is saying, that look, it's more of a question of decoupling some of these services, instead of saying that 5-10 years from now you're going to have Alipay and WeChat Pay here being the dominant players in the market?
Well, what I think is that, as Rachel said, that both can happen. If I take the example of Mvula in Madagascar, using our data, we are doing nano loan and nano savings since 4 years now. Last year during COVID, we gave 2 million loans to people. We had some risk issues, and we were able to adapt immediately our scoring in order to ensure that it was not going out of control quite immediately. So it was quite easy, because we are not giving long-term loans, but very short-term loans. So I would say what you are calling the future, I would say it's already there in Madagascar since 4 years. And I think the future of tomorrow, for depending on the strategy of the MOMOs, we could have, as Aisha is saying, a partnership with banks. And this is what we have done. And I still believe that tomorrow, all mobile money operators will continue to provide the platform to the banks for them to provide the nano loans. But as well, I think there is a future for MOMO operators that want to do their own brands and even gain a bank license. So I can tell you that since March, for example, Mpula in Madagascar got his bank license. So we are a fintech with a bank license, and I think this will happen more and more in the future for Africa.
One of the panelists, rather one of the individuals in the audience, Swadish Parahu, is basically arguing that the capital to convert a mobile money into a bank is too high, and I don't think that the mobile money operators would want to do that. How do you deal with that capital question? Because even when we're dealing with things like issuing nano loans, right, you're basically taking that risk to some extent onto your books, aren't you?
Yes, we are, but this is why we're working since 4 years on this subject. And we know what we are risking. And we have worked with a partner bank with 4 years. And we have improved our system with them. Because as you know, banks are very cautious with the risk. So already we had a partner bank who was really open to take risk, which is something that I encourage all our dear bank partners all over Africa to do more and more. Meaning that if you want to help financial inclusion, it means that you have to take a risk. And it's good to have a good payer, but you need to have some bad debt as well in order to improve your system and to offer to the most of the population that you can reach some microloans. And today, our target is to not to become a bank in a traditional way, but to be a mobile partner that will give me an advance anytime I need it, immediately. Okay, I will be a kind of companion of my daily life. And just to answer on your question on the capital, and you have to invest. Mobile operators, they have invested billions in order to build their networks. So I don't see that capital being such an issue for mobile money operators. If you believe in the business, you have to invest for it. And I see as well that to have a minimum capital is a protection for the customer at the end. Because you cannot have everybody that comes and say, okay, I'm able to do data crunch and I'm going to do loans. It does not happen this way. So you have to be very difficult. You have to be very cautious on the fact that we are on a trust model. And if you have some people that come in the game that are not people that you can trust, it can jeopardize everything for everybody. So maybe capital need to be reviewed to give help for the smaller guys to jump in, but it has to be enough to discourage people that will not be serious enough.
Okay. Rachel, when we were speaking about this idea a little earlier, and I'd like Rachel and Aisha to tackle this from two different perspectives. The question of standards came up in the conversation around if I'm moving money between my phone into someone else's mobile wallet, that requires a much simpler level of reporting requirements, for argument's sake, that if, say, I'm moving the same amount of money from my phone to someone in Kigali or Tanzania or Uganda, right? It's at the end of the day, it's all about moving money from point A to point B, but it would seem that there are very different standards in how we make these transfers if you're a bank, if you're a mobile money firm, and so on and so forth. So if we're trying to fix the standardization problem to make that as frictionless as possible, what do we need to do to get there, especially for cross-border payments? Rachel, then Aisha.
Yeah, exactly. So this is really the fundamental question of enabling cross-border interoperability. there are a lot of projects, regulator-led projects and donor-led projects to create multinational or Pan-African switches, and they all seem to anchor on the idea of standards. But I think that this focus is misplaced. I think that actually the standards that make this work are APIs. So, that can translate if, the way that customer information is captured in Niger is, this particular set of data fields, and the way that customer information is captured in Togo is this other set. That's that example, same bank, but let's say Ghana is this other set of fields. Through an API, we can make sure that the right information goes to the right side, or we can, in enabling that kind of corridor, we can say, okay, this partner requires this additional field to be filled, please fill this field. But where we encountered friction in enabling the first cross-border mobile payment channels in Africa was we found a lot of resistance from banks who were slow to join the scheme, not EcoBank, to say, well, how does this work? There's no source of funds recorded in a 60-second USSD session. How does the user put in the source of funds and the use of funds and the address of the recipient and your address? And of course, first of all, that information is captured in the KYC of the users, which the MNOs have captured, which the central banks can access. Secondly, I think there's a real argument to be had around the relevance of that kind of information for small value transfers. So if you've decided it's okay for an individual to move money, to move the equivalent of $50 from Nairobi to Mombasa, it's very hard to, with a straight face, say that there's a significantly different level of risk in moving that same value of $50 from Nairobi to Kigali. It's just not the case. And especially a lot of the actual trade and relationships are happening on real actual border towns, not even capitals. And so the physical distance is quite small as well. And so but in regulatory terms, and therefore in kind of financial rules making terms, these transactions, once they're cross-border, are treated very differently. And so the standards that we need to apply, we've made them work in the mobile financial services industry and in MFS Africa. That's what we enable between our different partners. But the standards don't actually need to be the same to send money to Mozambique as to receive money in Malawi. We just need to make sure that when someone is sending from Malawi to Mozambique, that both standards are met, and that's something that is pretty easily configured. It doesn't need to be a Pan-African standard, and I think that those efforts to privilege standards in this conversation end up making the perfect the enemy of the good, because we have a lot of market players who are meeting regulatory requirements, who are collecting that information, who are ensuring that the proper controls are in place. They might be doing it slightly differently. And as long as we have the technology that those different systems speak to each other, which is what APIs are, there's no reason for those systems.
Aisha, do you want to weigh in on that? The standards question on, do we need standards, or do we just need a situation where, systems can talk to each other and exchange the information they require?
Technical standards can be helpful, but I think today it's not the main issue. As long as you have all the APIs, when you have enough APIs for all your services, you can connect systems between a system from Mali to an information system from Mali to another one in a different country. But today we see we are struggling with integrations, but we are also struggling with the regulation, because it's very hard to send money to send and receive money outside of your regulated zone, and this is one point. So it can take a long time to get an approval to open a new corridor with a country outside of your zone. That's the first thing. And then we go with the technical integrations, and usually it can take some time, but we are always able to do it at the end, because we have technical teams. Our partner will also have its technical teams, and you have a lot of integrators now, and we work with them when we are not in the same group. I mean, when it is with an operator in the same group, like in a different Orange country, it will be very easy. But if it's a different group, you will need maybe an integrator, and there are a lot of actors now in the ecosystem that can do that. So I think regulatory aspect needs to be maybe, I'm not saying change, but it can be easier.
I would say change. We can change it. I'm with you on that.
It can be easier.
I fully agree. The regulatory burdens are much stronger, the regulatory restrictions go beyond standards, and they're a bigger problem than different technical standards.
All right. Blaise, you get the last word on this question of standards before going to the results of the second poll. Where do you stand on this?
Yeah, on this last point, and sorry for the connection for the area on, hope I'll have the time to come back. The issue around the cross-border instant transfer is more of the regulation. It's not technology, because today, EcoBank, present in 33 African countries, is having real-time and instant bank-to-bank transfer to the 33 countries. So meaning from you to send money from Mali to Zimbabwe, it's instant within the bank ecosystem. So now if we need to extend it to our partner, mobile money wallet, just a simple question of collaboration. We exchange APIs, or you exchange APIs through MFS or another aggregators, connect to EcoBank, you'll reach Zimbabwe, you'll reach the other African country, and this without going outside of the Africa territory. And we will also take charge in front of both regulators, the one of Mali and the one of Zimbabwe, and responding on your behalf when it will be a question of AML checks or any other sort of things. And this is, I think, the area of collaboration where we are not looking a lot as players in the market. We still need to have more and more discussion and collaboration toward that. Coming back on the lending that I've been following, I missed. This is another area where EcoBank has collaborated a lot and still collaborating. We are exploring many markets where we'll be launching it close to 21 within the 33 countries. And today, it's a question of taking the risk. If mobile money would like to become a bank and be in this field to take the risk, it's open. The business is there. We've seen the presentation. 400 million adults within Africa. Imagine a lending of a minimum of $10 as a microloan to 400 million people. Which bank can do that? It's a lot of money. So we will need people to come. We will need players to come in there. And as experience, I can showcase with the MTN in Ghana, where we've collaborated, over 2.5 million customers individually, borrowing average $54 within 2 years. And we are talking about more than 500 million that EcoBank has disbursed to people in Ghana. So this is possible. We can do it in Mali. We can do it in Cote d'Ivoire, DRC, new joiner from Action Group, T-Money in Togo. You are all welcome. So this is an opportunity for more collaboration, and we are ready for that.
Right, we're not going to charge you a commission for the pitch that you just made. Well, not yet anyway. But we did ask you, our dear audience, a little earlier. So for your thoughts, right, on our second poll question around mobile operators diving into the lending and insurance operations and the risk associated with that. And we asked you if you think that these firms are properly equipped to get into that space. So the majority of you, at least 3/4 of the room, believes that nope, they need to partner with banks and insurers. Blaise, I'm pretty sure you're going to be happy to hear that particular result.
Absolutely.
75% of the room believes that mobile money operators do need to partner with banks and insurers to get into the lending and insurance space as well. But let me just come back to the as we get into the the final part of the conversation before we jump into the Q&A, onto the data question, because as collectively, the running joke here in East Africa is that if you just want to figure out to paint a picture of who's been doing what transactions has someone been doing with someone else, all you have to do is hack Safaricom, right? It's a huge concentration risk. You've got 28 million mobile money accounts sitting in one company. Data protection, of course, is an evolving field as mobile money grows, as we get more people into the formal financial space, and more often than not, governments tend to be playing catch up on that space. So how do you think, what's your current approach to data protection, and how are those likely to evolve in the medium term? Aisha?
Sorry, Emma, I couldn't hear you.
The question is around data protection. How are you thinking about data protection of clients? Because mobile operators are sitting on a lot of data around what their clients are doing, where they're sending the money, what they're spending it on, where they get it from as well.
Okay. Yes, data. This is an extremely important subject for us because. I think each country has its own their own data protection laws, and they may have some similarities. But it is our duty actually to protect our customers' data. And for us mobile money operators, it's even more crucial as it is our customer trust actually. That we have to do. We have to make sure that we don't lose our customer trust. And when we partner with banks, for example, to lending of insurance products, we can help them build, for instance, their scoring. But we will always give them anonymous data. We will never transfer a customer number, for example. We never do that. And even when a customer asks for this kind of products, he will sign a contract with the banks, even if it is us who we distribute the products, but it is the bank product, the bank credit or saving, but they will sign a contract with the bank as well. Then they become the bank customer, and then we can share their KYC, because obviously the bank cannot approve a credit or even provide a credit to a customer if it doesn't have the customer KYC. So, but we are really careful on that. At Orange Money Mali, for instance, we have recruited a CISO, a Chief Information Security Officer, and he is a member of the executive committee. And in every project and every new product launch, he will be a member of the committee. So it's really a key component for us, and data protection, as I mentioned it previously, is extremely important to mobile operators in general.
Right, absolutely. Rachel, you operate across, I believe it's 33 plus different countries right across Africa. What's the threat profile like at the moment? Because it's on our end, we sit here and we listen to all these stories about hackers breached databases at this fast food company or this financial services firm in the US, but often we hear about what's happening out there. What's the threat environment like locally?
Well, the thing with the digital world is that the threats don't have to be local. So we get a lot of hacking attempts from all over the world.
a concentration to come from China every time we're in the press. So every time there's an announcement, we see a lot of attacks. We have always prided ourselves on security. We've never had a technical hack. I'm touching wood here. And we've never had any kind of technical breach, but it's something that we continue to invest in. And as the volume of transactions continues to grow, as the profile of our partners continues to grow, obviously this threat will continue to grow as well. I think it's something that came to a lot of our attention in this industry when there was most notably, there was a breach by Pegasus in Uganda sometime last year, which affected a lot of our partners. And it kind of highlighted that, consumers don't always know the entire value chain, right? The consumer is dealing with MTN, or they're dealing with Stanbic Uganda, and they have no idea that there's this additional third party that's handling the interconnection between the two. And that's not necessarily a problem, because I have no need to know which ERP, my service providers are using necessarily, but it does mean that there is a complexity to reinforcing or building back or repairing consumer trust, because it's actually not very effective to say, no, that wasn't us, that was our third party, sorry, because then either you're saying, we're not responsible, we don't vet our third parties, or you're entrusting us, but you're not actually using us, there's someone else in the background, neither of which really build consumer trust. So the threat profile, is global. I think it's not universally, the magnitude is not universal. It's the magnitude depends on visibility. So hackers go after companies that they end up hearing about. So that will, of course, even out in time. African companies are no longer, obscure from a global perspective, and that we shouldn't count on lower visibility to protect us. But the tools that we use to protect ourselves are indeed universal. So it's the same kinds of security, firewall, encryption practices that any other business would use. Right. I will say though, on the threat profile, one thing that we do worry about, to get back to a point that Aisha made, is the bigger threat that we worry about is a regulatory overreaction to some of these things. As this industry grows, as the players mature and volumes increase, this is something that will happen. There will be some breaches in some parts of the ecosystem, and I think in other markets where the thing that's stuck in my memory in this industry is the Garissa terrorist attacks in Kenya, and how that led to the Kenyan Central Bank shutting down every financial service provider that had any connection to Somalia, except for Safaricom, and it just had a huge distorting effect on the industry. And it lasted for some time. And there are a number of other examples where one thing happens and the regulator takes that breach or that incident and connects it to the mobile wallet, or to a country in particular, or to a corridor in particular, that doesn't actually accurately capture the risk. That risk was not universal to everyone coming from Somalia, just like it's not a universal, if there's some kind of money laundering or data issue with a mobile wallet, it's not universal to all mobile wallets. And so that's what we really worry about, is that there's one breach in one part of the ecosystem. That's just something, unfortunately, that happens across all parts of the financial sector. And we see a regulator, not necessarily even an African one, say, mobile wallets, no, those aren't safe. I read about that one thing, and right. Shuts down the
entire ecosystem. There's a flood of questions coming through on the Q&A, so I think I should get round to that. And the one thing that I've sort of skirted around and danced around and not really touched on in this entire conversation is around crypto. And crypto is coming up over and over again in the conversation. So here's one particular one that's coming up. And it's from, let's see, this is from Stéphane Beauvalet. Apologies if I'm butchering your surname. So to deal with all these questions around regulatory rules, AML compliance, unfriendly services like USSD, limitations in transfer fees, a lack of interoperability, he's basically arguing that the future of tech that can fix most of this would be cryptocurrencies, or at least stable coins to a large extent. I'm just going to throw this out into the room. Crypto, where do you stand on it? Solution, just a shiny little bauble out there that we should all ignore? Or does it have potential? Blaise, let's start with you.
Sorry, my mic was off. Potential, certainly, but the we are in the highly regulated environment or sector with the central bank. There are certain do and don't which are there, and until it gets clarified by the central bank, we are still in that position. That's one element. The other thing, it comes again amongst all the point which requires collaborations between players in the financial sector to oversee opportunities around these cryptocurrencies and see how we can support the regulators across our operating countries on the future laws or regulation around this one. But yes, we see it and we are analyzing internally, and we think it's something we need to look at closely, and the impact that that it can bring into the ecosystem.
There's an interesting comment from Daniel Giddy in the chat. It is basically arguing that, look, airtime is better than cryptocurrency. And
that's the other thing. Actually, is not right. Is not. In fact, what I wanted to bring here along with him is this opportunity of mobile money. We are not yet at 70%. To my view, we are still at the beginning. The journey is still there. We spoke about insurance, we spoke about lending, we spoke about remittance, but there is investment, right? How many people within the mobile money ecosystem willing to do nano investment? Okay, so we have the opportunity to go on the payment. We have the opportunity. There are many other areas not yet explored. As players, let's get together, make the life of our user seamless. The way today calls, international calls are so simple. Let's do the same for payment, for example. Let's do the same for collection. And this will be to the benefit of the merchant, the mobile money players, banks, as well as your customers.
All right, Aisha, then Matthew, then Rachel. Cryptocurrencies using blockchain to solve some of these payment issues. Is it too early to be speaking about these things, or do they have potential?
I think it's too early to talk about this in our markets. Because now we are trying to push digital uses in our markets, applications, and all this by ensuring that we protect our customer data, that we protect also our own data, and so this is not really a field that we are working on it at the moment. Even if we are working on it, we look at the developments that are happening elsewhere.
But it's not a priority for you.
No, it's not a priority at the moment.
Okay, Matthew, where do you stand on this whole crypto conversation? Too soon?
If you just allow me, I will just go back on the data for 1 second, because you say that people could be afraid to provide that data, but actually they are giving the data to telco since 20 years. And as an African, I will rather give my data to an African company for it to give me a loan, data for loan, than giving it to Mark Zuckerberg on Facebook to give me data for advertising, for things that I cannot afford. So if I can, I jump on this one because I think that data for loan is a priority. Data for advertising it's good if it's advertising for local products. So that's, I close it, but I just wanted to go back on the data. On the crypto, what I think is, why do we need crypto? I think that's the main case. If we are doing our job properly, I think crypto is not a must. if we are not doing our job properly, crypto will be a must. So I think it's the whole title is crypto is there because people are trying to avoid certain fees, foreign exchange, different taxes. They want to go as well anonymous. So we have to see as well which word we want to give to ourselves and to our kids. Because as we say before, we are in a world of trust. I'm trusting you, I'm sending money to you because I know who you are and so on. So crypto can probably help a lot of things. I'm not sure that blockchain is the technical answer. I'm not sure it reaches scalability to answer to millions of transactions per second, but it's improving every day. At Axion, we are following cryptos. We are looking at it, we are studying it. And if it's for the benefit of our customers, we'll go for it.
All right. Let me put in one last question as we move to wrap up the discussion. This one's from Olivier Noël, he's the managing director of Mocha Capital. Do bank standalone mobile money initiatives still make sense vis-a-vis strategic alliances with mobile network operators? Do bank standalone mobile money initiatives still make sense vis-a-vis strategic alliances with mobile network operators? Rachel, do you want to take that?
Sure. I say, why not? So I assume that this question refers to a bilateral connection, mobile network A and bank 3 decide to connect between the two of them. There's no reason that wouldn't make sense. Like I said, from the user perspective, it does not matter where the interoperability comes from, whether it's through a connection that connects that bank to every other mobile network on the continent or in the country, or if it's just a standalone connection. It is less efficient than going through a hub provider like ourselves or other providers, and it is it's less powerful as a proposition than a wider interoperability opportunity. But at the same time, there's nothing wrong with starting something like that, and kind of, especially if you've got a strong brand and maybe you're a market leader and you want to go after a particular segment. This is the premium wallet bank partnership. There's no reason not to do that. I don't think it's going to be a lasting proposition. I think we will move in a direction where both that bank in the partnership and the mobile network in the partnership will want to partner with other players of each category. I want to make one comment on the crypto thing to echo Mathieu's point, which is that right now, crypto is solving a problem that can be solved by embracing more progressive regulation. The crypto boom in Africa right now is really primarily in 2 places, South Africa and Nigeria, 2 places where it is artificially difficult to move money around. It's not because the rand or the naira are like heavy, right? Like there's no reason that you can't. It's harder to trade with those currencies elsewhere. It's regulatory exchange controls, right? And so that's where you're seeing a crypto boom. And so it's solving a problem that is not really a structural problem. It's a regulatory choice. At MFS Africa, our core business is connecting every type of store of value to every other type of store of value. So of course we're engaging with crypto-centric partners. Of course we will eventually offer a crypto company the ability to cash out or send money to a mobile wallet in Africa or bank account in Africa, because that's what we do. But I see it as right now a kind of an unfortunate workaround rather than a real space for innovation at the moment. I'm sure that will change.
All right. Ladies and gentlemen, thank you very much for your time and your input, your ideas. This fascinating conversation around the future of mobile money and how we're going to get the elements of the triad from mobile money and telcos and fintechs to all work together. Where's the friction? How do we solve it? How do we essentially get Africa moving and get the capital that we need moving from point A to point B? I'd like to say thank you very much to all members of the panel, Mathieu Masse from Axion, Aisha Touré from Orange Mali, Blaise Pascal Lequot from EcoBank, and Rachel Balsam, of course, from MFS Africa as well. My name is Raman Yang. I'm a business journalist with Bloomberg and CGTN. I would like you, our audience, please, if you can, to spare a couple of minutes, fill in a short survey. We've put in the link on the chat relative to this conversation. We'd like to hear your feedback, or it will help us improve as we essentially deliver a lot more of these sessions, these webinars on financial services across Africa to you between now and the middle of 2022. Thank you very much for your time. Appreciate your time and your company here. Asanteni sana.